All right, guys. So it's I gotta change my computer clock. It says 1 o'clock. It's 2 p.m. my time. It's 5 p.m. market time. Remember, we had daylight savings, guys. So hopefully you've got that fixed on your clocks now, and you don't have any excuse to miss the market open tomorrow. This is the Sunday prep. This is what is today's date? March 13th for the week ahead. And as always, a little bit of housekeeping, guys. If you guys don't have a good broker, check out Cobra. I got a link in the description. It'll save you 25% off your commissions, actually a little more, and you'll get your first month of your platform free. You guys know I would never promote something I don't use myself or believe in, and I've got multiple brokers. This is the only one you're going to hear me promote at all. Spike Heat, these guys are amazing for back testing historical data. You can pull historical data back 20 plus years in order to test a theory you may have, right? So you can think you see something in the market, and one of the cool things about the market is like something that is a really good, robust strategy should be applicable years and years ago, right? It shouldn't be something that's just it comes and goes. You want to find a strategy that stands the test of time. So the only way to do that is with historical data. These are the guys to use if you want to do that. Super powerful tool. I use it. I know a lot of other traders that use it and they swear by it, and it's an amazing product. Scripts to trade. These are my friends. I'm telling you, nobody makes codes as good as them for your trading view or your thinkorswim. Built-in custom or indicators, like they've got a whole shopping basket full of already made ones that are awesome, but they also can do custom work for you guys if you have an idea. And I'm telling you, they can really make your job a lot easier. Spend your money on the tools, guys. This is a job, this is a business, and you need to treat it like one, okay? And if you guys don't know, we are towards the tail end of earnings, as you can tell by the lack of like big names reporting. FedEx is in there, there's a few other ones, but nothing super notable, but it is still, there are names out there that are reporting. And then, we'll go into a few weeks of quietness, and I swear you'll blink and it'll be the next earnings season. That's just how it goes. Guys, subscribe and turn on notifications so you don't miss these. Give us a thumbs up if you like it. Please leave us comments, not in the chat on the live, but if you are watching this later, give us feedback on what you'd like to see more of or what you don't like, right? We're ready to listen to some constructive criticism, but we won't know it's broke if you guys don't tell us. All right, so if you guys didn't see the name of this week's prep, it is called Bear Market Homework. And so usually when I do these intros, I don't have charts, right? I just talk about thesis type stuff or like more like just concepts. I'm probably going to have some charts for this one, but before we get into it, I just want to explain it, right? So regardless if you think this is a bear market or not, there really is no way to argue that we're not in a downtrend, right? We are definitely pulling back from highs in a very controlled, orderly downtrend. And if you were stubborn and ignored it or tried to fight it, you may have already caught quite a bit of damage from it because for the last 11, 12 years, we've been in this crazy bull market where every single dip you could buy, and even if it went against you, you really didn't have to have a lot of discipline or a lack of a strategy even. You could just buy dips, and even if you were wrong, eventually you were right. And that doesn't work anymore. And that's because the uptrend is not an uptrend. We are in a downtrend. So again, regardless if you think this is a bear market or not, we're in a downtrend. So there's two main things that you need to be focused on when the market moves from a uptrend into a downtrend. The first is learning how to trade a downtrend. Now, a lot of people find it very hard to understand how to short, especially if all they know is a bull market and all they've ever done is buy the dip, right? Flip your charts upside down, guys. Shorting stocks is absolutely no different than shorting stocks in a downtrend is absolutely no different than buying stocks in an uptrend. Okay, all you have to understand is as long as the trend is down, that's the path of least resistance. So big pops back up into the mean, depending on whatever time frame you trade on, right? If you're looking for good entries, and the daily chart is in a downtrend, then identify what we keep popping into and stuffing. And you can put a short on into that rip. We call it sell the rip or short the rip. Just like you guys had buy the dip the whole way up, right? So you can short into the rip, and as long as that trend holds, you can cover into the flushes, and you can have a strategy that works that way. You can learn to make money in a bear market. Now, if you don't feel like doing that, you don't need to, but at the very least, you should be cognizant of what's happening and what's going on in the bigger picture. And you should be using this time to study. You should be putting in the hours, even though there may not be trades for you to take. Because guess what? We have historical references to go off of. We've had bear markets before. Nothing is new. The market is just a cycle and it repeats. Now, again, I'm not here to use any sort of, I'm not trying to make predictions. I don't want to have I don't want to come off as though I have a crystal ball. I don't. And I repeat this every week. I don't need a crystal ball. I don't need to know if this bear market's going to be a 20% correction or an 80% correction. Doesn't matter to me. Because all I need to know is, how do bear markets end? How do downtrends end? Same way when we were in a bull trend, I don't need to guess the top. You know, there's a lot of guys on Twitter or social media that they spent the last decade trying to pick a top of a bull market. And you know what? Eventually they were right. Whoop-de-doo, right? But did they make money that whole way up? Or did they just sit there and try to call the top and be wrong every time, right? Don't be that guy on the downtrend either. Let's let the trend be a trend and tell us when it's over. Because until those lower highs and lower lows change to higher highs and higher lows, we will continue to go lower. Where that ends, it's not our job to know. Our job is just to be able to identify it. So there is things you should be doing in the meantime to learn about what those things look like, right? So let's go ahead and take a look at some charts, and we'll just talk about some of the things that I do personally. I did something, actually I created a chart this weekend. Let me see if I can find this. I saved it as a, no, not that, it's right here. So this is very simple. Anybody can do this with any charting system, right? And let me actually get rid of, we don't need no pivots for this. Boom, boom, boom. I should have got rid of those already, sorry guys. So anyway, where is, oh, I think it was on the weekly. No, it wasn't. Where's all my, sorry guys. Like I said, I just did this weekend for you guys. Oh, they're not there because I have them hidden. All right, so all these, this is very simple, guys. You know what these are? These are just ETFs, okay? This is, and it's a simple concept here. Let me see if I can show the rest of them. Well, it doesn't even matter, okay? So all I've done is I've overlaid the ETFs over top of a SPY chart, right? This is just the SPX. And all you could want to do is go back to the market corrections we've had, right? Here's the 2020 dip, right? That was the COVID. This is the end of 2018. That was what, I think it was like a 20% correction, maybe a little less. But you can go back even further, right? And you can look at the 2008-2009 great financial crisis, right? Which we've talked about. And these little yellow circles, that's from a previous Sunday prep, guys, where we talked about how downtrends end. So one of the things I was just, and this is the way your mind should work when you are trying to study something. You should be thinking of, what is it about the way markets move and the way things interact and the dances they do that might be things to look for in the past to see what we're going to experience in the future, right? And one of the first things I think of is like, I wonder, do certain sectors tend to lead the way out, right? Because we already know at the top of bull markets, there is a shift to certain sectors being stronger, right? Utilities, defensive, consumer staples, all those tend to be stronger at the end of a bull market as the growth stocks and some of the other more speculative things contract and end up starting the downtrend a little bit sooner. And so it makes sense to try to identify these things. And so, you can look at these, and you guys can do this on your own, right? And all these are the ETFs, and you can see, like, okay, look, this is industrials, bottomed right around the same time, right? So that's not very useful. But let's see. The one I noticed was look at where retail bottomed. Retail bottomed 4 or 5 months, 5 or 6 months before the actual market. So think about that in terms of what does that mean? Well, when retail starts to rebound, people are when you're in a recession, when you're in a downtrend in the bigger picture, and the market's coming in. Remember all the things we went through in 2008, 2009. If you guys were old enough to remember that, I know some of the traders in the market now are really young, but in 2008, 2009, people were losing their homes, people were losing their jobs. The market and the whole economy went into a tailspin. So when all of a sudden retail, where people going out and shopping starts to catch a bid, that's kind of wait. If we're in a recession, why are people going out spending money, right? So retail bottomed and then started to bounce, and that was kind of a bit of a leading indicator on that bear market. Now, I'm not saying it is for every bear market, but these are the way the wheels in your head need to be turning in order to get you guys thinking, how can I go study past historical bear markets to see what were indicators that we were coming out of it, right? Now, listen, remember, again, these are just ideas for you to look at. The one thing I want you guys to always understand is that the only way any bear market will end is for the downtrend to end, right? And we've talked about this so many times. For me personally, my advice is you guys need to be studying higher time frames, weeklies and monthlies, because as long as those higher time frames stay in a downtrend, the daily chart's going to continue to do what we've seen. They're going to have these bear market rallies that seem very strong, right? Because they're face rippers, man. There's a bid, people rush in, and think about why, right? They don't want to miss the bottom. Everyone's so enthralled with making sure that they get dead bottom. The same way the whole way up, they wanted to make sure they got the top. And what did that do? It left a trail of dead bodies, right? As we just continue to make new highs. Well, the same thing happens on the way down. People, they think the bottom's in and they rush in. And I'm telling you right now, you don't got to be first in. Look at any bear market that we've ever had historically. There are bottoms where you get the push up and the pullback needs to make a higher low before you have any reason at all to think that bear market is ending. Look at, for instance, right here, this is the .com crash, right? This bounce right here failed to break this high, and we rolled over and went lower. So what do you think happened to everybody that was trying to call this the bottom? They all got ran over, steamrolled, or they stopped out, which sent us tumbling lower, correct? But then we get this one, and then we get this higher low, and we actually break above it, and the downtrend ends. And it's no different on a monthly chart, guys. Look at any bear market and you'll see, look, low, push up, higher low, and the break, and we're off. The whole way down, this whole way down, there isn't a single time when we make a higher low followed by a higher high on a monthly chart. This is, again, we're not predicting anything. We're literally reading what the author is writing. As long as the author says lower high, lower low, the path of least resistance is down. So when you start to see where you get these market turns, then you can kind of also look at, okay, remember what I just said about the sectors. We looked at retail. Okay, was there a way to play retail when the market showed its hand? Once the market shows its hand, what sectors have based? What sectors look strong before the market looks strong? What sectors have started to give you that higher low and the higher high before the market turns? Where is the strength already going? Where is the money rotating into? Those are the things you need to study, because guess what? I don't give a flying F where this market correction stops. But when it stops, when the market starts to show its hand, you better have your list ready, because that is going to be your money-making opportunity, is spotting the change in the bigger trend and saying, look, I like in an uptrend, you know, for the last 10 years, 11 years, 12 years, we've been in a bull market. Okay? When you get towards the end of it, when we're in the year 10, 11, 12 of a bull market, every time you buy the dip, you really can't get greedy with it, right? We're not trying to start long swing trades for, you know, 5, 10, 15 years at the top of a bull market. Okay? We're trying to think near-term long swings. But guess what? At the end of a bear market, when a bear market ends and we start our next secular bull market rally, that is where the big money can be made on the long-term swings. Because guess what? As you guys have seen, so much stuff has gone on sale, right? Now, I don't care about buying it right now, not for the long term. Because, again, remember, we talked about this last week. Things can get cut in half, and they can get cut in half again, right? Look at the ASANs, the SEs, the UPSTs, the AFRMs. Dude, the PTONs. There's so many stocks out there where people thought they were on sale 100% ago, right? Piton's 21. Piton was being bought up by everybody thinking it was on sale at 60, 70, 80, right? FSLY. Dude, the list goes on forever, okay? So I'm in no rush to go in and buy those. But when we get that turn in the market, my homework is done. Right? And I continue to refine it every week. But you guys got to do it too. So, you know, obviously as these Sunday preps go on, I'm not going to continue to remind you guys about this. But when we do get what we need to see for this bear market to end, then we'll revisit this concept and we'll discuss like how we can benefit long term off this. Because, you know, I'm a day trader, but I have swing accounts. And guess what? No long-term swings are being started right now. Any kind of swing I put on, unless it's on the short side, is for the near term, right? But when this bear market ends, my IRA and my longer-term accounts, like the kids' college accounts, those are going to be used to buy stocks that have positioned themselves for long 5 to 10 to 15-year runs, where I don't have to worry about the day-to-day on those stocks. So just because we're in a bear market or a correction, I swear I'm going to get so much hate mail from calling it a bear market, but whatever, guys. As long as this correction continues, don't think that just because you're a long-only trader that you don't have homework to do. You definitely do. You need to be studying. You need to be constantly asking yourself what to be paying attention for so that you know, one, when the downtrend ends, and two, what is your shopping list? Because one day that will come. So that's it for the intro, guys. I'm going to hit the disclaimer and then we will actually, I'm going to remember, people wanted to review trades from last week's prep. So I have one. We'll talk about it. Last week's prep, I think we nailed quite a few ideas and broader term names. And so, and you'll see how that kind of segues into this week's prep as well. Guys, neither I, True Trader, or any of his representatives are registered as security broker dealers. I am not a licensed financial advisor. Nothing I talk about is a solicitation to buy or sell any stocks. It's simply for entertainment purposes. All right, guys. So let me get rid of, well, we'll just go to the ES because that's where we always start. Actually, I forgot. Let's just start. The one idea from last week, and there were a lot. Remember, oil and energy. We've been talking about it. If you guys have lived under a rock, maybe you don't know what's been going on with Russia and Ukraine and what it's done to the oil and energy markets. But last week, if you review the prep, you'll see the ideas. I could probably go through any of them. They were all really spot on. But the one that I was able to actually even trade was CF. So here was the CF idea from last week, guys. CF, another one. This one has been really taken off. You notice how the candles are starting to get a bit longer. I want that trend to continue. I want expanding range. I want a speed up. 98 is the first level I'm looking at, but I'm not married to it. I will reevaluate at 100 again. I like those psychological round levels, guys. 100. This one is all-time highs, I believe. Yeah. Okay. And if you guys were wondering if all-time high somehow meant it was not, I'm not going to mess with it, not for me. I fox with it. I do, but I have good risk management and I trust myself. All right, guys. So that was the idea. Hopefully you heard what we were talking about. 98, and then 100. And remember, the reason I want to point this one out is for a few reasons. One, well, I mean, for real, if you guys pay attention to these Sunday preps, hopefully you guys can start to see these ideas on your own. I don't want you to rely on me to give you these ideas. They're black and white, clear as day. You guys should be able to see why that level or those levels were of interest and how to play these. And the other reason is to show you guys something about risk management. All right, so this is a zoomed in version of the CF trade. This is not the whole day, right? But notice, remember what I said? I said, and forgive me because I can't show you my mouse on this screen. You can see it over here, but you won't see it over on the DOS chart. So just follow along with what you see on your screen. That 98 level was what we talked about first in the idea last week. But that 98 level, if you noticed, stuffed. It really did. There was a big red candle on the 1 minute chart there. And I got, it was close to a point of pullback, right? But once I put that trade on, if it doesn't roll over, I'm not going to just ride it, right? So you can see I stopped out of the trade completely. 98 didn't work. I mean, it almost did, whatever. But I'm not, this is where risk management, and this is why sometimes it worries me to give you guys ideas, because I can't manage your risk for you. I can only manage my risk, and I do. So like I say 98, I'll put a trade on. Doesn't mean when it goes to 100, I'm not stopping out of the 98 piece. I do. So then it rips to 100. You can see I put it on. We went a little through 100, but we hadn't pulled back yet. We get the pullback. And another thing I talked about last week was the concept of the front side trade versus the backside trade. You obviously didn't hear it in that clip, but if you go watch last Sunday prep from last week, I said it a lot of times about a lot of different ideas. And that is, I will put the trade on front side, but I'm having those covers when we flush to lock in. And then when we confirm, you can put the trade back on and have the bigger picture idea. And that's exactly what happened, right? Put the trade on at 100, we flush, came under 99, got some covers, and then it looked like it was going to push back up, took the rest off, still for profit. But then we got weak again. And you realize that that level is just a significant level up there at 100. And we started rolling over, put the trade back on. The sad part about it was after I covered, I don't know what the lowest cover was. It was just above 97. But after I covered the trade, I thought we were going to get a pop back into, another 99 test, and I'd get another reshort. And unfortunately, that wasn't the case. And we got the full unwind, and I missed. I just didn't want to feel like I was chasing it. And so, I'm not trying to brag. You can clearly see I fumbled this trade in my own eyes, right? This should have been, remember, I had a lot of conviction. This was A+, that this was going to unwind. And this actually gave trades the whole week. All last week, it kept shoving back up to 100 and stuffing. So, it wasn't one of those things where you couldn't have taken it Tuesday, Wednesday, Thursday. I feel like it went there. I feel like it shoved to 100 almost every day. A lot of resiliency in these names, guys. So that was the CF trade. Hopefully you guys can gain a little bit of insight about the way I manage my risk and the way I put these trades on. But let's get into the actual broader market analysis. Let's start with ES here. This is your monthly chart. Not a whole lot more to update on that because obviously we haven't started next month's candle yet since last week. But let's hit the weekly. Now, one thing I'll point out is this yellow circle was drawn, I believe, last week. And it was simply to illustrate the fact that we may start to try to put in a higher low on the weekly chart. Again, no crystal ball needed. We either do or we don't. But until we come under this level here, we still could be, right? I don't know where the bottom of this pullback's going to be. So even though we're lower now than we were last Sunday when I drew this circle, that doesn't negate the idea, right? We still could be putting in a higher low until we break these lows here. So again, it's still the same triggers as last week as far as the long trigger, and you'll notice I've got these alerts set, right? So there's an alert up here for the, and you can't see it on this chart because this is a weekly. And when we go to the daily, you'll see it. This alert right here says 50-day, 200-day. That's a significant level, right? A shove up into the 50 and 200, which are right in the same area, that's resistance. That's what I want to look for. But the first thing would have to happen for that to even materialize would be for us to get this long trigger, right? So the long trigger is if we do not take out these lows and then we go and break over 44.1875. That's the level for the long trigger. Over that, and we may have what it takes to get a push up into the 50-day and the 200. And we also may be able to push up into the weekly 20. But again, as we've been saying for a few weeks now, that still doesn't do anything for the bulls, because all that might end up looking like is us trying to put in a lower high on the monthly chart. Let's go back to the monthly real fast and point out now. None of these candles, since we started this pullback, have broke the high of the previous month, right? So even if we get over that level, we still might end up putting in a lower high on the monthly chart, which if we then in turn come lower is really, really bad for the bulls, okay? I mean, there's a lot of things that have to happen in a sequential order, right? It's like dominoes falling, right? So first things first, the bulls need to do is they need to get above February's highs. Even if they do, they still, once they do that, they need to, on pullbacks after that, they need to start holding levels. They need to start basing and showing some support. If they can't do that, and then we were to roll over, that's dominoes falling for the bulls that is going to push this bear market a little bit lower. How much lower? Again, no one needs to have a crystal ball. You just need to know how to spot a trend reversal. So back to the weekly. Last week's lows, I don't have them marked as a level of support, but there is one just above it. Remember, guys, I don't want alerts right at the level. I want to be alerted before it, right? So I got an alert to let me know when we're getting close to last week's lows. I have an alert for this last week's highs as well as the 20-day. And if we look at the daily chart, surprise, surprise, Friday, that push stuffed the 20-day, and that's a really ugly daily candle, right? Spike into the 20-day and close on lows. That's disgusting. As far as what strength looks like, it ain't in that picture, okay? So again, lower highs, lower lows, just stay with the trend, guys. The path of least resistance. As long as we're in the downtrend, all pops back into resistance should be looked as opportunities to short weak stocks that are also popping. Until this changes, if it changes, if we base, you can start to look at things for maybe getting pullbacks to buy, right? Buying flushes. If you're buying flushes in this market on any names, they better be names that are still strong even in this weak market, right? And hopefully you've noticed that trend over the last few weeks with the Sunday prep is every name on the long list are strong names. And it's no different this week. Let's look at the NQ real quick. Let's see if I can get the chart to change. Okay. Again, everything is exactly the same. Pops up into the 20-day or stuff, and we're literally just riding this 20-day down, right? So the first thing the bulls need to do is get back above the 20-day. They need to put in a higher low. They need to get back above the 20-day and start to push. What will that look like on a weekly chart, though? Not much, right? It's going to look like them finally getting a pop on the weekly. They would love to do that, but they really have not been able to. So if they can, again, the long trigger on the weekly chart for the NQ is over 14,391. Over 14,391, maybe they can shove up into the weekly 50, maybe they can shove up into the weekly 20, but look at what the weekly 20 is doing. It's starting to curve down. Everything's starting to roll over on these higher time frames. Monthly, again, you're starting to get the flattening of the monthly 20. We've pulled back through it. That's not a big deal to me so much, but we still have not made any. March hasn't broke February's highs. February didn't break January's highs. You know, like all these are just steady pullback. We need to see a push higher to see what then happens, right? I've said this forever, and I will continue to say this. I don't care about the pullback. It's what happens after the pullback. So on the monthly chart, that's all we've done so far. All we've done is pull back. So now I need to see what happens when we try to push. Can the monthly chart push? If so, does it just make a lower high? Because if it does, if they push, and then we go back to the weekly chart, let's say they get this push and we come up here and it stuffs and starts to roll over and look weak again, the monthly chart's going to start to look like the weekly chart does now, and the weekly chart's going to start to remind me a lot of what the daily chart looks like now. That is an important concept. You may have to rewind that and listen to that a few times. But if the daily chart all of a sudden gets strong, all that's going to look like on the weekly chart is a push. And if the weekly chart can really get going, you might get the monthly chart to have a monthly candle that breaks the high of the previous candle. But again, all that's going to do is make the monthly chart start to look like the weekly chart does now, and the weekly chart may start to look like the daily chart does now. And if you look at, this is the daily chart on the NQ, guys. This is ugly, right? Well, imagine if this was a weekly chart, okay? That really extends this bear market quite a bit out. Again, not trying to make predictions, but I'm just saying, if this, then that. If we push on the daily and the weekly, but it turns out to be a lower high on the monthly chart, things don't look better yet, okay? So we'll address this every single week as we do these Sunday preps, and we will, as a team, try to help you guys spot that shift in the sentiment. Right now, sentiment's down. It's very, very weak, very heavy. All right, so Bitcoin, and I do want to use Bitcoin to show you guys something. So Bitcoin, we talked about this channel right here. We talked about that forever. This whole channel, while it was being built, we talked about it during the Sunday prep. Why did we talk about it? Because we had just had this long bull run, and it rolled over. And, you know, just like the SPY and the NQ are doing now. So this is what you would like to see the bulls do in the broader market on the S&P and the NASDAQ in order to build a base where they can then try to get a push from. Because that's what happened here on Bitcoin. They actually built a decent base and then pushed. And lo and behold, they did make new highs. Now, granted, they've rolled over again, but again, the process just repeats. Maybe they can try to build a base again and try to push again, because this base here is not quite as low as this channel was back here. But again, the reason I was pointing that out is to show you what the S&P and the NASDAQ would need to do to show some sort of strength being built. You'd like to see a base. It hasn't started yet. Right now, it's just lower highs, lower lows. I think too many people trying to find the bottom. Bitcoin. Again, we talked about this last week just being something that's getting tighter and tighter and tighter. It's just coiling, right? This circle here, I mean, it still holds even though we came below it, right? We can just drag this down. Doesn't matter, right? It's still a higher low as long as we don't break this one. So if they push and we get over that 46,000 level, then maybe this goes. But if they come back under this 32, I believe it was, did we call it last week 32, 33? Let's call it 33, okay? Under 33K, and then we're going lower, okay? So again, it's in no man's land for the moment, right? We're just coiling just like we did back here, right? We had drawn these out. We had drawn those same circles back on this channel. So as long as it's just channeling, getting tighter, eventually a move is going to come. The longer the channel builds, the longer it builds a base, the more sustainable the move out of the base can be. And I don't know if it's going to be up or down, but just remember, the longer something builds a base, typically the more sustained and more powerful the move out of that base will be. So again, not much to really add about Bitcoin this week because it's still just in that channel. It's still just coiling. That's it for the broader market. We're going to hit up our sector ETFs and our bar chart for our sector analysis. Let's head over to the matrix. Call it the matrix. The matrix short term. And again, lots of red. Energy was the one that stands out as the only one with strength. And remember, it's kind of a duh, right? With the stuff going on in Ukraine and Russia, it makes a lot of sense why you would have these be strong. But let's just take a quick look at a few other things. Utilities, even though it's red, it's very slightly red. That's relative strength in this weakness, right? Not really the sector leader you want if you think a bear market's going to come to an end. Consumer staples, that was the one. Wait till we get to the charts, right? So I had some notes about actually I don't have notes. I try to remember what I was going to say about these, but consumer staples I want to point out. So let's go through these sector ETFs real quick, guys, and see what things are starting to look like. And not psychedelics. All right, so retail still looks weak. You'll notice I have alerts set. This alert right here says long trigger. Look at the weekly chart, guys. It may be putting in a higher low here. We don't know. But if it goes up here and breaks over, let's see, what's the level? Over 78.59, you get your long trigger. Maybe we get a push back up into the weekly 20. Again, just like the broader market, if that happens, it doesn't mean the bulls are out of the woods. There's still a lot of stuff for them to do to get any sort of strength. But that would be the first higher low followed by a higher high on this weekly chart since it rolled over, right? So just baby steps, guys. First things first. First, this downtrend needs to end. The only way for a downtrend to end is for us to start making higher lows and higher highs. So we have the possibility. But you also have this level marked down here. It says new lows, roll over, stay weak, and the market can continue lower. These are just fundamentals about how stocks move. Okay, so now financials I wanted to point out. This is one that I do think is pretty telling. This falling out of this little up channel we've had, and then the pushback up stuffing and then rolling over, I think a lot of the financial names in the financial sector look very, very bearish compared to what they looked like not that long ago. So you can start looking at individual names, because think about it. If these names are just now entering the bear market while everything else has kind of been fading off, there's a lot of names in this sector that still have meat on the bone, right? So I think this one is finally broke. I think it's finally saying, all right, we're ready to come lower. And I think this is the area, this purple shaded box is the first level where I think if it starts to roll over, I would start to think, okay, maybe this is an area of interest for this to find support. So it's got quite a ways to come down, right? Real estate, take a look at, again, most of these thoughts, like it hasn't done much since last week, right? It's still just stuffing underneath the 200-day, the 50 days right there right now. It's about to cross under. Again, it's kind of just, I feel like we're going to stuff up there. We're going to come back and test these lows. Healthcare, same. It looks exact same. If I say same, I mean same from last week, right? So if you need to review what I said last week about them, go ahead. Building materials and industrials, same. Utility, strong, right? In relation to the broader market. Again, like I said, not typically what you want to see for a bear market to end. Guys, this is the chart. Remember how this was one of the few remaining strong looking charts, and look what happened. It really, really fell apart. It's definitely losing this trend line. Will it regain it? I don't know, but I feel like when this sector starts to go, I feel like everything else is kind of going to lose its bid, because, consumer staples is the things people got to buy, even when we're in a recession, right? People still got to buy toothpaste and soap and all that stuff, right? There's a lot of products that tend to fare okay in a bear market because people still got to buy them. Yeah, well, the chart is saying that it's pretty weak right now, and this was the last sector that had any real strength other than oil and energy. Remember that. Oil and energy, different beast, right? Those things are not gonna they're not gonna come down the same way as these things are, especially with what's going on in Russia and Ukraine, okay? But that chart is very, very telling. Let's see. Consumer discretionary still heading lower. Communications still really bad. Bios. Now bios, again, this is the one that I thought was really oversold. It hasn't rolled over and made new lows yet since last week. It looks like it could, but it also looks like it's starting to flatten out. And I'm wondering if this just makes kind of like a rounded bottom, kind of starts to build a channel. We'll see. But again, I really think this is one of those ones that's just been really oversold. Maybe it wants to come down to this trend line. Who knows? Again, no crystal ball, and I don't need one. I just wait until the author of the story tells me that the trend is changing. So we just kind of take it week by week. I do these every single night, but we just do the Sunday prep for the public once a week. But every night I take a look at these, and it's just if-then statements. So you guys got to learn to build those. Tech still looks weak. Obviously, growth names have just been getting smoked. Now, here's your energy sector, and it still looks like it's kind of like a blow-offish candle. It's definitely still extended on the weekly. The one thing I wanted to point out was, we had that blow-off last week, which was what we were looking for, which is why all those names last week from the Sunday prep were such A-plus setups. Even though they're still extended, they are not A-plus anymore, because we just have to be objective, guys. These things have pulled back and bounced, and they're just kind of consolidating, right? They could make another leg up. And you can't treat those names like the MOSs, the CFs, the XOMs, the CVXs, the PXDs, all the oil and energy names. You can't treat them the same way we treated them last week. Because last week, they had not taken a breather. They were all straight up, okay? Now they've taken a breather. This is the point where, you have to kind of determine what time frame is in charge of the trend. So you guys have to understand, this is an hourly chart. Let's make it 2 hour. You'll see we've pulled back. We've reclaimed the 120-minute 20, which was in control this whole way up, right? You see it holding. Now we've reclaimed. If this wants to go higher, it can. And it's our job as traders to remove ourselves from in front of that speeding train. If this wants to go higher, get out of the fucking way. Just stand aside, let it go, and maybe it's going to set up again. If it rolls over and gets weak, then you can step back in and look to short pops. But you do not have to be a superhero trying to say tops in and I'm short and pops up here, and when it breaks highs, fighting it. You're gonna end up, with so many paper cuts and headaches that when it's finally ready, you're not gonna be. You got to be mentally. You got to have not just the financial capital, but the mental capital to be there for the A-plus setups. And there's nothing A-plus about it anymore. Okay, and that's what I wanted to point out with the oil and the energy. And oil's the same, right? It blew off, and it blew off into a level where, it just makes a lot of sense. Why on earth would this blow off here? Well, because it has in the past. That's resistance. Now, it's still extended, right? Can it go lower? Yes. Should it go lower? I don't know if you can say that. The things can stay going higher as long as the trend holds. So as long as, if this wants to go sideways for a little bit longer, maybe even pulls back to the 20-day, but there's no meat on the bone in terms of that A-plus setup that was there last week. So remember that, guys. You can always look at a chart and say something could happen. The only time we want to put money at risk is when you can look at it and say something should happen. Because even when it should, it still might not. So, even should statements aren't 100%. All right, that's it for the sectors. Let's get into the ideas. I know this is probably going to go way over what the time was I wanted to try to use. Let's see. Long ideas, strong stocks, looking for continuation. Remember what I said. In a downtrending, broader market, any idea you have for a long better be a strong stock. So let's look at some of these. First idea I got is CP, Canadian Pacific Railway. Now, let's see here. The idea I have is this weekly, was it the weekly 20? Let's see, 73.20 to 73.50. Yeah, so you got the weekly 20 and the weekly 50 really pinching tight there. One of the things I like to do is look at a weekly chart and have the weekly 20 and 50 kind of caught up, because what happens when something goes sideways for a while and bases is those moving averages come together. You'll notice on this way up, they get this gap between them, right? So you may get a pullback and it may continue higher. But the longer we go up without having that breather and the sideways base build, the less I want to get greedy on these trades. But now we've gone sideways, we've consolidated, and I think it's really tightening up. Now, I don't know if it's going to be this week or not, but if this flushes, especially emotionally, if this were to flush emotionally right down, look at everything in that area. You've got the 50, the 200, the 20, the annual pivot. You got the weekly 20, the weekly 50. There's so much in that area. That 73.20 to 73.50 spot is where I want to get involved on the long side on a pullback on Canadian Pacific. So that's that idea. CTSH is the next. Again, very similar looking chart, right? You get these consolidations, it's tightening up. You got the 50 and the 20 right there. Now, even though the 50 and the 20 are right there on this one, that's not what I want. I'm getting a little greedy on this one because I actually think we could get a bigger pullback, and I don't want to be too early. The first level I have marked is 86, which is going to be around last week's lows. So a flush to 86, I would get involved, and if that doesn't work, I'm looking for 84.50 50, which is, this is the weekly 20, this yellow line, okay? So I plot the weekly 20 on my daily chart so I know where it's at without having to switch time frames, right? But if you look at a weekly chart, we've been holding the weekly 20 every time we pull back. So guess what? If we pull back to the weekly 20 now and we hold, we're putting in a higher low on the weekly 20, and then back above these highs is a long trigger. Should get us back to the all-time highs. Again, I don't know if it's going to happen, but it sure as hell ain't going to happen on stocks that are acting weak, not in a bear market. When we're in that downtrend corrective phase in the broader market, stocks you're looking along better look like this. Either this, or they better be really oversold and you're just looking for that bounce play. Because I am not looking at downtrending stocks to try to all of a sudden get bullish on. Not yet. Okay, remember, that's for when the bear market shows its hand and says, look, we're putting in higher lows and we might make a higher high. There's a turn in the sentiment. So this is the kind of chart you guys want to look for. And look at, not only that, but look at this. It would be a retest of this major breakout level back here, right? So I really like this 84.50 level, but I may start a little early at 86 just in case it wants to hold last week's lows. And if it doesn't, I'll stop out and re-enter. Remember, guys, manage your risk. That's the most important part of this, all right? Next idea is CVS, and this is last week's idea. It just didn't do anything last week. 1 second, let me get the daily. Yeah, it's still just getting nice and tight. Now, look, I know that we may just break above. I mean, I could set an alert up here over 107 and try to join trend. What I'd rather do is I'd rather see this kind of flush out all the people that were buying this in anticipation. If you guys recall last week, they had some sort of negative headline about the new CEO had come out and said they're going to deal with sexual assault, or not sexual assault, but like, what's the word? Basically just inappropriate workplace behavior. They're going to deal with complaints from that differently. So I don't know what that really means in terms of like what the market will give these guys, or what kind of price that's going to induce out of this. I don't care. I hope it shakes out longs. I'm looking for the weekly 20 right at that 100 psychological level. I want to flush down to 100. I want to join this, and you'll see again, just like that Ctsh chart, a pullback to the weekly 20, which it's held already. It showed that it respects it. If it does it again, it may be putting in that higher low and building that flag up here on the daily chart, and we may get that break. So I would love to put some on at 100, and if it closes strong, possibly leave a swing on. And remember, it's not a long-term swing, it's just something near-term, okay? We're not starting long-term swings until the bear market wants to show its hand. All right, next idea, FCX. A lot of these mineral resource plays have been very strong. This has pulled back to the 20-day, which is also like this big breakout area. You can see it was important here, and now we've shown the ability to hold it. I want to try to get a flush into it one more time, guys. 45.60 to 46. You got the quarterly pivot. You got these highs. I want to see a pullback, a higher low, hold the 20-day. I want to get long. Now, look, I know a lot of people are going to say that, Ricky, the ATR on this is $1.89. That's going to put us a lot lower. I know. But if this is going to pull back and be strong, I'd rather it not give a whole ATR to the downside, right? I'd rather it be a shallow pullback Monday off the open, and then have the ATR really be the upside, right? I'd rather have it do a 20 cent, 30 cent, 50 cent pullback, and then from those lows rip $1.90 higher. That's the way I'd like to see this one play out. That's FCX, 45.60 to 46. RTX, another one. I don't know if it was last week's idea, but maybe 2 weeks ago. I like the way it's behaving. It's in the defense sector. There's a lot of macro headlines going on with Russia and Ukraine, so I think a lot of these defense names keep a bid. 92.60 to 93.60. It's basically the 50-day, this uptrend, and the monthly pivot. And you know, I just want to see it flush out one more time. That's the idea. Again, I have another alert set up here for the long trigger. If this wants to just be a higher low right here, you guys, I'll draw it one more time, but I draw these all the time. You guys should start to see these on your own without me drawing them. So if this right here is just a higher low, and then we break, then the target's going to be up here at 104, right? So pull back, push up, higher low, higher high, and we go. If it does that, that's why I have this alert set up here, just so I can join trend. So that's RTX. Remember, guys, I'd rather be buying this down around 93.60 at that monthly pivot on an emotional flush. And I did hear, I think I read just recently, Russia and Ukraine said they had made some headway on negotiations, and there may be a ceasefire signed pretty soon. So if that kind of headline comes out, that might give some of these defense stocks a bigger pullback if the market thinks, oh, this is all kind of blowing over. But again, I don't necessarily think, I like to think that what happens on the chart is much more important than what happens in the headlines, the news cycle, okay? SBLK is the last one on this list, and I tweeted about this last night. The shipping sector, out of all the sectors I looked at, the shipping sector just looks really good. This has a goddamn gorgeous weekly chart. Look at this weekly chart. You guys see this nice curve, this big long base build. This is 2016 up to 2021 when it finally started to break out of this. And now we're curling up, and you get this really nice curl on the weekly 20. And remember what I said about that weekly 20 and that weekly 50 getting nice and tight here, right? They didn't close, they didn't cross, and they didn't touch, but they pinched, right? We got a nice tight weekly 20, weekly 50, and then we broke. I wish I had seen this a few weeks ago, because this is a beautiful setup. But I don't think it's done. I think I want to get involved. The level I wrote down is probably me. Yeah, it is me being greedy. It's me knowing I missed this move. I want a flush back down to these, retest this breakout level. 26.15 is what I wrote down. Is that the weekly? No, it's not the weekly 20, but it is a retest of this breakout area. Okay, so 26.15. I doubt I get it. I feel like I probably missed this one already. But if it gets it, if it comes back to that level, I want a piece of this, because that whole sector looks really good. And look at the volume too. You see the volume really picking up. I gotta believe that there's some names in this sector that are gonna push. The reason I chose SBLK is because the volume and the liquidity in the range is actually, I can't remember if the range was good. Let me check. Yeah, it's $2 range. But the liquidity too, right? It trades 2 million. That's not very liquid, especially for day traders. But if you look at some of the other names in those sectors, they're way less liquid. Now, Zim's another one I like. I think Zim's liquid. Yeah, Zim's liquid. But again, it would need to probably come back to the 20-day. Let me look at the weekly on Zim. Yeah, and Zim's just been off to the races, right? It doesn't have that same kind of weekly chart that SBLK and some of those other names have built, because it's a newer issue, right? So it doesn't mean this thing can't rip. I'm sure if the sector goes, they all go. But I like SBLK for that weekly chart that it's built. I just think that's a beautiful weekly chart. That's it for strong stocks looking for continuation. The next section is oversold reversion setups. And if you guys go and look, I've shown you guys these before, right? These screeners I use, oversold reversion. Everything in here almost is Chinese. Well, not everything, but all the ones that look tasty are Chinese. I am not touching any of the Chinese names this week. There's way too much negative sentiment out there, and I'm not getting involved on them. Let those kinds of things do what they need to do. Let people try to find the bottom, catch those knives. That ain't me. I was smart enough last week to keep my hands away from it, because some of them looked really, really juicy in terms of what I look for off the open. I like those emotional flushes down into levels, and we got them on those names. But dude, you had to know what's happening in China to be smart and say, nope, not for me. And that's what I'm doing this week too. Like, I'm not going to take any, the Baidus, the JDs, the Babas, none of them. Okay. So the only thing I really liked was McDonald's from last week. And McDonald's from last week, we talked about this monthly 20. I thought maybe that would hold, and it didn't, right? But we came lower. And the way it reversed with this big hammer candle down here, big green candle on high volume, again, it's not really my typical oversold reversion play, but the way I would handle this is to consider the lows are in, and I'm looking to get long on any kind of flushes back into levels where I can set risk. Now, remember, when I say lows are in, that means if this loses, that's Thursday's candle that made the low, right? If this loses Thursday's lows, you have to admit the idea was wrong. Maybe it breaks lows and then rips higher, but it doesn't matter. Your idea was wrong, or my idea was wrong, and therefore I would not be involved in that trade if that happens. But if you look at the intradays, you see this level here, this 224 level. You can see here, came through here, but we held, and then when we got underneath it, we kept rejecting it, right? Now we're back above it. I'm thinking 224. What did I write down? Just 224? Maybe I didn't write down anything. No, I did. 223 to 224. I want to look for higher lows and something to set risk against. I like McDonald's. Dude, McDonald's, if there's any food places out there that are recession proof, it's probably them. People are going to probably eat McDonald's more if they start losing jobs and the market goes in, the economy goes in the shitter, right? So, I don't care if you like McDonald's or hate McDonald's, but we got to be objective, right? And I think it's oversold, and I think they're going to give this. I think the lows are in, and if you look, I mean, we've pulled back to some serious levels here on the weekly chart. So that's the only name in this section. Okay, so we're going to move on to the shorts, weak stocks, looking for continuation. And let me show you something really funny, guys. I actually remember how we just went through the ETFs, and I was like, God, all these ETFs look like crap, right? Except oil and energy, which are blowing off. And even consumer staples had rolled over. Like, everything looked like crap. And I was like, dude, I'm probably not going to find any strong stocks. So when I went into my Strength Hunter screener, which I don't care if you guys copy this. I hope you guys, in fact, I always change this. I just do 0 to 10% below the high and price above the 20 SMA. You'll see 63. So I was actually kind of like happy to see there was some stocks out there that look a little strong, right? But 63 charts, okay? Now watch this. When I go into my short pops back into the 20-day. 280 stocks. That is telling, guys. That tells you a lot of stuff, right? First of all, this is only stocks that trade 2 million shares and have a 1.5 ATR and are over $15. Do you understand? There's only like 400 or 500 stocks in the whole universe of stocks out there that meet just that criteria alone. So that tells me that over half the stocks that are liquid enough and have range are really weak. Okay, that's very telling. So let's get into the names I picked. Remember, you could probably throw a dart at any of the growth names and they'd fit the bill. Remember what I said about finance. I think financial names look weak. Morgan Stanley looks pretty bad, and I picked this one obviously because of liquidity compared to some of the other names. Goldman Sachs kind of looked like it too. A lot of the financial names look trash. So Morgan Stanley, I'm looking at 90-30, which is the annual pivot, and you can see it was like we really stuffed here, and it was also kind of a bounce area from prior. I want to pop back into that annual pivot to try to fade this. Again, it would look a lot better if the daily 20 was down there, but maybe it doesn't happen on Monday. Maybe we come a little lower and then we get that pop back in there in the next day or 2 or 3 days. And at that point, maybe the 20 SMA has moved down to those levels and just gives us another little bit of confluence, right? But I do like that 90.3 level on Morgan Stanley for the fade. DKNG. This one, dude, as disgusting as it is, this is in my long-term IRA or whatever. But so don't think that I just talk trash on stocks that I don't hold. I'm objective as it can be. Listen, their CEO came out and tweeted like that he's going to make people that sold their stock regret their decision. And meanwhile, he was selling his stock over the last year. Whenever you see a CEO tweet something like that, it's the biggest effing red flag. Like, it's exactly one of the big red flags on AMC. It's exactly why people get so bearish on Tesla. Like, you got Elon constantly pumping his own stock. It's exactly why a lot of the small cap stocks, we laugh when the CEOs come out and try to pump their stock and say like, oh, we're just down because of shorts, right? Like, get the hell out of here. Go manage your company. DKNG is a giant short for me on any pops back into resistance, just based off the damn CEO. In fact, they'd probably be smart to replace his dumbass. But the first spot I'm looking for is, let's see, it was this 1840 to 1850 area. What did I write down? 1850. You can just see it's been pop after pop after pop. You got the quarterly and the monthly pivot right up there. I'm looking for a big spike up into those levels to get short DKNG. If it doesn't work, there's the 50 days got the monthly and the last week's weekly up there. Dude, I have no problem stopping out of this and let it rip higher and take it again, because this is the kind of stock where you can put quite a bit of size on and let it work. And when you're right, you're really right, right? This thing has just been in a perpetual downtrend. Look at how the 20-day has just been magic for this thing. So, yeah, DKNG, big short. Can't believe the CEO has the audacity to come out and say dumb shit like that. GE is the next on the list. GE. This one's really rolled over, still making these lows, riding the 20-day down. You know, most likely pops into the 20-day are good, but I'm not there. I'm up at 95 where you got that monthly pivot and this candle stuff. And it was kind of this day's high as well. That's what I want, just because, you know, I feel like 92.30 up into 93.70 is not going to be enough. This thing has a $3.62 ATR. I'd rather see a pop into 95 to get short on GE. But GE, I think's broke. Really think that's going to start to roll over, guys. Lucid. I like a lot of these electric names that had this hype and all the air's coming out of them. I like Lucid for a fade. I'm looking for a pop into the, was it the 20-day? What did I write down on this one? 25.50. Okay, so here's what I wrote down on this. 25.50, which is going to put us into the 20-day and these recent highs up here. But I do want to see how it reacts on a pop into 24.35, which is the highs from, let's look at the 5-minute chart. All right, well, the 1 minute will work too. Yeah, these highs up here, which was kind of, it was Thursday's area of rejection, and also Friday's little push and fail, okay? So I kind of like 24.35, but, you know, I'm going to be very nimble at that level. If it doesn't work, I'll cut it quick, and hopefully we get the 25.50 area. But I don't want to just say 25.50 and then know in my heart that 24.35 is a really key level and just sit there and watch it pass me by without trying it if it gets there, okay? So 24.35 is the first spot, 25.50 is the next on LCID. Now, this isn't on my list, but it just reminded me of something, and I'm going to throw this out there, and that is DWAC, which is a SPAC, is finally starting to roll over. You know, we had that big push to 100, rolled over. I want to treat DWAC as though the backside's in, because people are probably going to think I'm crazy when I say this. This is probably going to be a $10 to $12 stock before you know it. You could have said the same about Fubo and Clove and all those other SPACs that had all that hype back then too, and people thought you were crazy then. And SPCE and every friggin' SPAC out there has just unraveled. This is going to do the same. You have to make sure that you keep an eye on it to identify that shift in the sentiment, because the unwind is going to be massive. And so I think backside's in. Any pop to the 20-day on DWAC is a fade for me. If it gets through, I'll stop out and I'll put it back on higher. But I want to put some DWAC on. I got to look at the interest rate, the borrow rate for overnight. It might be a little pricey, but I really feel like this thing's swingable, right? I feel like you could be swinging DWAC for almost single digits. I see someone in the chat said Rivian 2, and I agree. I think Rivian 2 could be single digits. I think Lucid. I think all these names that had all that hype, like Fubo. Go study these charts, guys. Study the Fubo chart. Study the Clove chart. Study the way that they get that hype, and then the unwind is massive. And there's just, once the backside's in, it is in. And all you have is people left holding bags and they start finding reasons to believe that they're right by going on Twitter, by going on StockTwits, by going on YouTube and Instagram, finding people that will tell them like, no, it's going back to all-time highs. Like just like AMC, guys. Like it's just cult mentality. And when you get those kinds of people involved in the stock, the only path for it to go is lower. Okay. Okay, sorry I got off track with that DWAC, but Uber was the next one on the list. Uber, I'm looking for, what did I write down? 3270. It's going to be, yeah, pretty much Wednesday's highs. You can see how it lines up. You can just draw a line across right here. That's the line I'm looking for. Pop back into that. Again, just like with MS, I don't know if it needs to happen on Monday. I think maybe we could come lower first, and then this 20-day could come down, and then we get that confluence when we spike up into that level. But 3270 on Uber. If you guys remember, Uber and Lyft had that whole thing where I don't remember how many days ago it was. You can probably spot it. Yeah, the Uber earnings, if you guys remember that and what happened with Uber and Lyft, I feel like all that volume came in. I think there's a lot of people stuck long Uber and Lyft from that day, right? So I think when you get that, just like with what I said with the Colt stuff, when you get a lot of volume that comes into these names like that, and then it rolls over, you get those bag holders up there and all pops become shorts. And so far it's been, right? All pops on this have been fades off the 20-day. So hopefully the 20-day comes down a little lower. If it doesn't matter to me. If I'm wrong at 3270, again, manage your risk. I'll stop out and I'll revisit it at the 20-day. I don't care. Next name on the list, and the last name on the list actually for this section is UPST. Remember, it was a long idea last week, and the long idea was based off, why is my chart not showing my line? Let me see. I don't know where my trend line went. I had a trend line drawn here from last week that was just showing this, right? And we were thinking, maybe it makes a little higher low here and rips. We lost that level. That 107 level was really key for UPST. And I think this might want to come down to 70s, 75 to 80. So I'm looking at all pops back into 107. 107 is the spot. You guys see this purple line here. If you guys don't know about scripts to trade, I talk about in the beginning. This is an indicator they made off a friend of mine, All Day Faders on Twitter. This is called VWAP Boulevard, 107.27, and it goes all the way back to this really high volume day back here. And it's amazing what these high volume days VWAPs do. Look at the way it's been support and resistance every time we come into it. So any spike, and again, listen, I'm not basing this off VWAP Boulevard. I'm basing this off these lows here that kept holding and then we snapped. What's going on with I don't know why it keeps, my time frames are all messed up here. This is supposed to be a 2-hour chart. That's why. I think it's okay. I'll figure that out later, guys. Now there's your 2-hour. This is supposed to be 5-minute. No, something happened to my charts. Well, there's my trend line. No. Let's see here. 1 second. This will help me identify it. 2. This is supposed to be my 5-minute chart. This is supposed to be my 1-minute chart. There we go. It's fixed. All right. So 107. You see, I got the line drawn there. Again, it's not drawn at 107. It's drawn before it. I want to be alerted for a pop into those levels. That's it for weak stocks. Looking for continuation. The last section, guys, is overbought reversion. And remember, we had so many names on the list last week. Let's look at them. CF, beautiful trade, beautiful idea. Even though we haven't got back to the 20-day, it's now a could statement. It's no longer a should statement. Okay, could it get back to the 20-day? Of course, but it also could go higher. MOS gave the fade, gave a beautiful fade, but since it caught a bid again, it's going higher, or it's back up at highs, and it could go higher if it wants. So it's no longer on this A+ setup. Not interested. Trying to remember some of the other ones that were from that list. AA maybe was on there. There was quite a few, right? point is, none of them are A plus anymore. None of them interest me. Again, if they set up later, if they get legs, then that next leg higher and they get extended again, I'll revisit them. I will, but there's no point in me putting them out there on Sunday prep and possibly getting somebody in a situation where I get a DM later like, hey Ricky, I'm really bent on this trade. Like, I don't like hearing that kind of stuff, guys. So there's nothing on this section of the Sunday prep this week. Again, if energy and oil catch bids and go higher, maybe these do too. But understand the difference between, actually, here's a good exercise. Check this out. Understand, there it is. Understand the difference between this chart and this chart. This has found a bid and it's consolidating, especially if you start looking at these higher time frames. You know, we're just kind of, now it's making higher lows. We get, just look at this, man. This could just as easily break out to the upside as it could to the downside. So while this big move up, where we get this big extension from the 120-minute 20, we get the big extension from the 20-day, that's A plus, okay? It's no longer A plus. You guys gotta learn the difference. So that's it for the Sunday prep. I'm gonna check for questions real quick. Let me see. Raul's kind of been keeping track of things. DMC, how do financials normally perform with higher interest rates? Typically, that's good for them, right? But that doesn't mean that they won't go down with the whole market, right? But typically, the financial institutions actually benefit from the higher rates. Simon's asking, nice short on Tesla at 842. Let's give it a look. 842 is going to put us where? The month, you're talking about on, if we spike up there again? Yeah, I mean, I see it for sure, but let's take a look at a few other things. You guys can, one of these things I like about looking at charts with you guys is you're going to start to see the thought process, right? So first thing that comes to my mind when someone asks me to pull up a chart is, let's look at a higher time frame. Let's look at the weekly. Actually, let me show you something off the monthly too. Look at what we bounced off of. This is the monthly 20. Let me get rid of this. So bounced off the monthly 20, may test it again, don't know, we'll see. Weekly chart. Now, there is a looming long trigger, and that's why you see this alert set up here. Over 2 weeks ago's highs is a long trigger. Should get us a push up into the weekly 20, which is curling down, coming over. Again, that's not till quite a ways away. It's up at around 900, right? The high from that week was 889.88. So now we can start peering into the lower time frames, like a daily. I do see the downtrending 20 and the way it's held it. So one thing I will point out is, notice how when we do reject off the 20-day, what is actually happening is bigger moves down, then push up in. Bigger move down, then push up in. We just had a shallow move and a push up and a pullback. In order for me to care about that level, Simon, and hopefully this makes sense to you, I want to see this actually come much lower first, so that now we get a bigger move back up into it. We already kind of had a shallow move. I feel like a pop back into it now, yeah, could be. But again, that turns into one of those could versus shoulds. But also, I know Simon's part of True Trader, and so Simon will understand what I mean when I say this is, you know, that level is going to be way up here. And so if Monday off the open, let's say we open right around 800. If Tesla spikes 40 points in like 5 to 10 minutes, yeah, that's A plus, and I will short that. But it's not like, it's not going to be the same kind of idea that would end up on the Sunday prep. But again, TT, True Trader, or whatever, the way we trade a certain strategy over there, that 100% would be valid and taken. There's the 20-day, the 200-day, and a monthly pivot. And a lot of congestion up there. So definitely. Let's see. AFRM, DMC is asking, AFRM for short continuation perhaps. Good range. Yeah, I do like this name. Had a big red candle on Friday. And it is breaking. You guys see this? Look, lower. Well, let's draw this first. So it's just making here's a high, pull back, lower high, lower low, right? So we have just rolled over. So the next step for me would be to look inside some lower time frames and see if we spot levels of interest. Yeah, the first level I'm looking at would be 34.50 on an emotional spike. You definitely have it breaking some levels and stuff, but like I said, guys, keep in mind, like, go back to that stock screener and you could throw a dart. There's 280 names, right? All of these are in downtrends. All of these are below the 20-day, below the 200-day in a downtrend. Really just go through these, find names with liquidity and range, and ask yourself, where is the best spot where on a pop we can get short? And AFRM's definitely in there, right? If that were to spike back to the 20-day, you got the annual and the quarterly up there too, right? So 38.50 to 38.90. Let's see here. Simon's asking a ton of questions. Simon wants to know about SM. SM I like for a long swing. It's part of the oil and energy, guys. So what I like about a name like this is when you just get these big rounded bottoms. It's just a big cup and handle happening here on a higher time frame, and it's trending really well. What is the question he's asking about though? Into 36.75. Are you asking for a long, Simon? I think he probably is. Let me check the chart. Yeah, I like it. I think it's a little close. Maybe down into 35 too. Either or, and I like this name as long as oil and energy stay strong. Okay. And Simon, very next question is BBBY at 18. This is one of those meme names. I like to short these. I don't like to get long. Any spikes back up into the 200-day, I'd probably look to fade BBBY. I don't like this, and I don't think your idea is bad, Simon. I just would rather not buy pieces of shit. Sorry, but I mean, this company the only reason it catches these bids and gets these big moves is because it's part of that meme basket, if you guys understand what I mean by that. Tony says, regarding 50-day, 200-day crossover, something you pay attention to. I mean, it's not something I don't go personally looking for them, but when I'm looking at charts, I definitely look at what are the 50-day and the 200-day doing, and I look at what price is doing in comparison to them. So, like, I don't remember what chart we were looking at that we were talking about it. Was it MS? Yeah, the MS chart, right? So, it's just another thing that other traders I know are going to look at. So, and it's definitely not a good look. You don't want faster moving averages to be below the slower moving averages, right? The only way that can happen is when stocks roll over and stay in a downtrend. If stocks just pull back and then go back up, it doesn't give enough time for those slower moving averages to get above the faster ones. So it's definitely something I pay attention to, but much more than that, I pay a lot more attention to how stocks react to those moving averages. Hope that makes sense. What are my thoughts on VX, the volatility futures, as an indicator for more market weakness? I mean, I pay attention to the VIX a lot, not so much because of what I think it means for the overall market trend, but I like to use it as an indicator about how I'm going to treat stocks that tend to have a lot of range, right? So when we get into these really volatile markets, I typically like to make sure I know where VIX is, so I know how extreme of a move to expect before I consider something to actually be extreme. But VIX can go up at the same time as the market can come in too, right? They're not an inverse correlation. It's really just a measure of fear and volatility. And you also have to understand the way it's built too, is that it's gonna be zero bound over the long term, and so it can rip, but it's gonna eventually melt and come back down. And so, yeah, I mean, the market rolls over and the bear market goes lower. VIX can definitely catch a bid, rip, but it's not It's not, the market's not going lower because VIX is going higher. That's not the way it works. That would be the tail wagging the dog, right? VIX goes higher because there's fear and panic in the market. And if the market rolls over, then that may cause VIX to do that. What are your thoughts on Ray Dalio and his books? I like to read a lot of them. I have his Principles book, and I like to listen to a lot of his stuff as well, especially in regards to market cycles. Ray Dalio is one of my favorite guys that talks about market cycles and the way that you can see the rotation and the cyclical nature. There's actually a really good video that someone did some animation for that's out there. I think you can find it on YouTube about market cycles, and Ray Dalio is narrating it. It's really good. Grand Eyes are asking AMD. Listen, guys, if you guys have a question about stock, it helps me a lot if you be more specific than just giving me a ticker. AMD and Nvidia and all these names are just going to keep rolling over lower with the tech sector as long as we're in that bear market. This is still making lower highs and lower lows. Yes, it's still trying to hold this little level here. Will it? I don't know. I mean, that is the monthly 20. Again, I'm not trying to make predictions either. You definitely have the possibility for a higher low here if we can get back above 130. Let's just call it 133. But I mean, honestly, like, I have no reason at all to be trying to get involved in these names until we finally start to do what we were talking about in terms of the market first showing us that there may be a bottom. And again, picking a bottom is a fool's errand. Picking the top was a fool's errand. You don't need to pick tops and bottoms. You just need to read the trend. Somebody in chat, please tell me, what's the trend on AMD? What is this trend that I'm looking at? Is this an uptrend or is this a downtrend? Okay, now he says AMD 105. For what, a short? That's really too close. Like, we closed at 104.30. So, like, I would never short 105. It's too close. Thank you guys. It's a downtrend. The path of least resistance is lower right now. If I wanted to short AMD, I wouldn't do it until probably the 20-day, a retest of the underside of the 200. You can see there's kind of some levels up in here too. Yeah, right up in here. If the 20-day were to cross back over, so this is going to be what, 112, 111? That'd be the spot for me on AMD. Other than that, I mean, I don't really think anything about it. As long as the trend's down, I don't want to be long those names. That's the only thing I can say about it. So, Abra is asking, charge point, CPHT flush down to the 15 level for a long 50-day and the 20-day and pivots. See how it's point. Now I know charge point pretty well, and the one thing I don't like about it is it's just that small range, right? It's just 1 point range. Now 1 point range is pretty good for a cheap stock like this. I'd rather trade Blink if Blink gets volume, but Blink has just been dead lately. Like, look at the average volume on a $20 stock to only trade 2 million shares. But let's look at charge point and the levels you were looking at. Yeah, beautiful level, right? That's exactly what I would like to buy on a flush. Now look, this on the other hand, check this out, guys. This is what you would want to see, like, for instance, on the SPY or the NASDAQ, to show some kind of end to this downtrend. This thing has been in a downtrend for quite a while, right? Just downtrend. But look what we've got going on down here. We've kind of put in this base, a nice little bottom, push up, higher low, higher high, and we reclaimed the 20-day. Now, even though we lost back here, we got back above it and we're up. So I actually do really, really like that level. Who asked that question? That was Abra. Nice eye on that. That's a very good spot. The 20-day, the 50-day, and the quarterly pivot all right there at that 1480. Nice eye. Good eye on that. Let's see here. Where's the next question? Do you ever watch the tick and trend for timing day trade entries? I used to a lot. I don't anymore. I mean, for me, the older I get and the more I've been around, it's just less is more. I'd rather just trade the first 30 minutes of the day, catch those emotional flushes or spikes into the levels that we're looking at, take a few points quick, 5 to 10 minutes into the day and just go play golf. Honestly, it's just a lot less stress, a lot, the older you get, guys, the more your focus needs to be on, like, how can I make my money in the market and be gone and go enjoy my life. I know way too many traders that are just glued to their screens 8 hours a day because they think they need to be, or they think that by sitting there staring at screens that they're actually doing real work. But by and large, a lot of times you're just making yourself feel like you're being busy. If I trade the open first hour. Most of my trades are in the first half hour. After that, if I'm still sitting there, I'm usually back testing stuff and looking at data. Let's see. Do you think a long at 103.59 could be good regarding AMD? Let me look. AMD, like I said, like AMD, I mean, 103 was the level, 103.59. Nah, I mean, I wouldn't personally play it because it's too close. It's less than the ATR is a $7 ATR on this stock. If it's flushing and it loses Thursday's lows, it's gonna flush. I mean, the very next level is not till 100 pretty much. You got the monthly 20 at 101.05. Yeah, I wouldn't play it personally from the way I trade. I'm not gonna jump in there and try to catch a knife that close on something that has a 7-point ATR. Now, what you could do is watch it off that level, because I mean, what is that? Is that Thursday's low, 103.07? You can watch it off Thursday's low and see if they start to, if buyer step in and it starts to make higher lows. Then maybe you could try to join trend. But honestly, this isn't the kind of chart I want to get long. I want to be longing, the ABBVs and the stocks that are in uptrends, even in a bear market. To me, I want to join the path of least resistance. Like, if you look at every kind of stock that's on my short list, they're all in downtrends. Like, look at DKNG. This isn't the kind of stock I want to long. I want to get short on pops. On the other hand, if you look at something like CVS is a perfect example. It's just been in this bull trend, and it's almost not paying attention at all to the broader market and the correction. So, could you buy AMD off 103.59? Go for it. It's not my style, not what I would trade. Do you use ATR for targets or stop levels? I use it for kind of trying to gauge where a stock could go, especially on opening imbalances. Like, I'm looking for emotional spikes or flushes off the open. So let's take a look at something like Coin. Coin has a lot of range, $14 ATR, right? So if I'm looking for a level nearby to play, I want to be somewhere, let's see, we're at 160. Friday's highs puts us, that's a full ATR right there. That's a 14-point day, right? So it gives me an idea of where my eyes should gravitate to on the chart, but it's not like, I don't look at the ATR and go, that's my target or that's my spot. No. I use, if you guys are over at Ctsh, you guys know the levels I identify for targets. Let's see, is there any more questions? Simon's asking about Apple. He's been following Apple for the last few weeks religiously. Again, Apple's kind of like AMD, where like the 200-day just seems too close. Again, another thing, we haven't really talked about that this week, but we talk about this every other week, and that is we don't know where the market's going to open tomorrow morning, right? Are we going to gap up? Are we going to gap down? Don't know. If the market gaps up and Apple gaps up, and then we flush down to the 200-day, then maybe I want to buy it off that level. But where we're at right now, it reminds me a lot of that AMD chart. Like 103.59 is too close for me unless we watch it off the open, it comes down there, starts to put in higher lows, and gives us something to risk against. But right now with Apple, the 200-day is so close, I'm not buying it on a flush there. I may buy it on a flush down to the low of this candle, which is by this monthly pivot. So what is that, 152? I could see buying Apple on a flush into 152 with tight risk. The only way I'd play the 200-day is if we flush down there and buyer step in, we make higher lows, and it starts to turn. That's the only way I could play that. I've been playing GFI for a while now. This is David saying, a gold play. What do you think about a consolidation for another play up? I don't typically trade the gold names. To me, I wouldn't want to get long this just because we're extended from the 20-day. If you guys watch a lot of what I talk about. Stocks like the trend on the 20-day. I mean, look at the way that this just took off. And of course, it's falling gold, right? And remember from last week, we talked about the futures, gold, silver. A lot of the mining, the mineral stuff has just been straight up, right? So in order for me to even want to play these, they need to have resets. They need to have pullbacks to some support. Even though this pulled back, it didn't give much, right? And kind of reminds me of CF, right? Or, I mean, any of those charts, right? They had big moves up. Actually, AA pulled back. What were some of the other ones? You know, they have big moves up and they have these pullbacks, but they don't quite get back to the 20-day. CF is probably the better looking one out of all of them. So it had a pullback. It didn't get to the 20-day, and we are flagging. Now, remember what I said about CF earlier. I didn't say it's not a long, or I didn't say I wanted to long it. I'm just saying we could go higher. I don't want to short it. It's not A+ anymore for the parabolic short that it was last week. So this, even though this could go higher, this looks a lot like that GFI, right? Or GFI. It didn't pull back to the 20. Now we're back up at the highs and we're kind of flagging. I still would never take this for a long, even though it might be a beautiful long, right? It just doesn't have the risk reward that I need for it to be a good trade. I just feel like it's too loose, right? All right, guys, I'm gonna wrap it up there. Yeah, I don't see any other questions, but again, guys, anybody can have any idea they want about any stock. I don't care. What I do care about is whatever trades you put on, whatever ideas you identify, start from a risk management perspective. Do not start by looking at a chart and thinking how much money you're gonna make on that trade. Start by thinking like, okay, where would my idea be wrong, and how can I get involved in this idea with the least amount of risk and the most amount of upside? Trust me, you guys start from that angle and your trading is going to be a lot less stressful and losses are going to be a lot less significant. All right, stay safe out there, guys. I'll see you guys Monday at the